everyone, welcome back. So today what we are about to look is how to trade in Fibonacci and what is golden zone, and we can take trades according to Fibonacci levels. Okay, so I will show you some price action methods with Fibonacci levels and how to trade in those Fibonacci levels. Okay, so as we know, in the basic price actions we used to draw the path and then we will be looking for the character change and everything. Okay, so I will just show you an example. If the price is start from here, it goes up, retraced back, and it went up again, and it retraced back. Okay, eventually, when the price moves up, it will face some resistance over here like a double top. Even though if it's not crossing or something, it will be like sweeping downwards. Okay, so let's just say it was just tapping over here, and it retraced back in a displacement. We will be having some short entry over here. Okay, then we will be getting a structure like this for the long entry. This path, I mean, this is the low, this is a higher low, in which this path eventually is a bullish setup. Okay, in which this doesn't mean it is a short setup, even though this is a bull setup. Okay, I will show you how. From here, if you are drawing a Fibonacci, okay, this is the high. Okay, this is where the price are now. The price retraced back to 0.5. Maybe it will be retracing to 0.3 also. That depends upon some criteria where the price is not having some space to move and everything. Okay, so let's just talk about 0.5 and the golden zone. Okay, the price retraced in the 0.5 and it moves higher. So the fib will be from this low to this high. Okay, the price didn't retrace to 0.5. It may be retraced on 0.3 and it went back. Okay, let it be. It just retraced towards the Fibonacci area and it came upside. Okay, so the retracement maybe could taken in the 0.5. Okay, that doesn't mean we can enter over here. The reason is that we need a character change over here for the another call setup, unless this is a short setup only for now, because we don't know the price will be reacting from here or anything. Okay, so what happened is that in the 0.5 we will be getting a bounce. Okay, in the 0.5 we get a bounce and it went shooted upside, in which the another fall came. Okay, which hits the 0.618. This is a golden zone. The golden zone values are 0.618, 0.706, 0.786. This is the golden zone. Okay, this is the golden zone and this is the 0.5. The 0.5 concept is that this is the area of the premium is high. Okay, this is the higher area. I will just mark it as in red. This is a higher area, and the 0.5 onwards only it is a discount area. Okay, that means in a green. 0.5 is a normal value in which the price is half of the price, half of the value, so that we can enter in a trade. Okay, but if we are getting the price in a more discount area, we need to analyze where the price is coming. So that is how the golden zone comes from the 0.618 or from the 0.706 or from the 0.786. We can take by keeping an SL over here. If we are getting 0.786, then that is really good, because that is too much discount area. The price could have reacted from here. Okay, by keeping an SL over here, do not keep an SL over here. By keeping the SL over here, you can enter the trade in the 0.786 after a bullish candle. So that's how the Fibonacci works. Even though this low shows us that there is more liquidity. Okay, this low shows us there is more liquidity and the price is swept here, and we got a character change over here. If we are taking a trade over here in the bull candle, if we are taking a trade over here, it is good. We can keep an SL over here. But if we are not taking a trade over here, if we are just waiting for this character change to happen, and in another retracement, we could have get a displacement over here. If we are getting some bullish FVG over this area, then we can enter in this trade over here, and by keeping an SL over here only. Do not keep SL over here because it is much more range. By keeping an target 0.386. This is our first target. 0 is the first target, 0.382 is the second target, 0.618 is the third target. Okay, so this is how the price action works in the Fibonacci. So I hope you understand this setup. I will show you the settings also. We will be just marking only this much settings: 0, 0.5, 0.618, 0.706, 0.786, 1, and if you need 0.382, but I don't use to trade in 0.382. Okay, Then the first target, the second target 0.382, the third target 0.618. Okay, so these are the settings which I am using for the Fibonacci. Okay, so I hope you understand. Okay, so I will show you some examples in the Nifty. In a Nifty chart, we were having an example. I will show you. I just marked this because for easily understanding. From this low, if we are marking a Fibonacci towards this swing high, the reason is that it swept over this range. Okay, it came back to this range. It came almost towards this high. Okay, what happened is the price was just bouncing back and it just recovered in a V shape. Okay, it just recovered in a V shape in which it reacted over here and came down and crosses above. So here we have a change, and about the sell side the price was sustaining. Okay, so what we'll be doing is that we'll be drawing a Fibonacci from this low to this high, in which the price reacts on 0.5. See, the price reacts on 0.5, and the target was first target was 0, and the second target was 0.382, third target was 0.618. Okay, this is a call setup, and I will show you a put setup also. When the market was falling on the election day, when the market was falling, we can draw, I'm sorry, we can draw a fib from here to the low, in which you can see the price reacted in the 0.5 with an imbalance. Here we were having an imbalance also. See, we were having an imbalance. What we learned is that if the price is tapping on the FVG and closing in a red candle, we can enter in a short trade. Okay, in which you could have achieved a good trade. 0.382 was the target. See how the price was reacting in the 0.382. Then later on it started falling 0.618 also. Okay, we need to draw from the swing low to the swing high and wait for the confirmation in the retest on the 0.5, and moreover in the 0.618, that is the golden zone. 0.618 is the good entry for the long or short. Okay, it depends upon the risk reward ratio which you are trading. Okay, I will show you an example in the TataSteel. This is the daily time frame. See, the Fibonacci works on every time frame: 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hour, 1 day, 1 month. You can trade in any time frame. It doesn't matter. Okay, if you are looking in the TataSteel, this was the all-time high, I guess. Yeah, this was the all-time high. It breached over there, so this becomes an high in which the price was retracing backwards, and it taken out this SL, and from there it bounced back. Okay, I hope you understand that. The price was reacting over here, in which the price came down and eventually it taken out this low and sustained above, and it retraced back in the daily time frame. I'm not talking about 1 hour or 4 hour, it's a daily time frame. Okay, so we will draw a Fibonacci from here to here. This is the low, this is the high. Okay, so what happens is that after a consolidation, the price was just sustaining above the our buy side 158.90. It was tapping on multiple times. It tapped and created an high. Okay, so we were just waiting. We will be just continuously waiting, in which our high will be over here, because as you know, the high is continuously changing. We are getting a consolidation over here, then it went up again, came back, and it created an high. Okay, in the election day or in the day after sessions, the market crashed and the price just came downwards to our golden zone. It is the 0.5 over here, but the more discount area is the golden zone. Okay, see how the price reacted from the golden zone. 0.618, 0.706, 0.76. I'm not telling you need to take a trade over here or here. Just take a trade in the golden zone and wait for the SL. Where would be our SL? If you're taking a trade over here also, you will be keeping our SL in the Fibonacci low only. Our first target was 0. Okay. How much percentage you have? 15 percentage in a 3 days. The next target is 0.382 and the second target is 0.618. I will show you one more example in the gold, in which the price was bearish. Okay, the gold setup was bearish, in which we have a setup over here. The price was consolidation over here, taken out this high, like we talked about yesterday's trade also. This created as a Fibonacci. This high to this low created at 5 minutes Fibonacci, in which we are having a multiple FVGs over here, everywhere. Okay, so what we need is we need an imbalance. We are having an imbalance over here. Let it be FVG bearish. When we drew the fib, we are having the golden zone 0.618. Okay, so what we learned, once the price is reaching the FVG, it should close below in a red candle for us to go more short. Okay, so what we know is that in the 1020 candle, the price went to 0.618 and it was reacting and it became a red candle closing below the FVG. So we will be shorting here, keeping an SL over here. This is our SL. We are not keeping SLs over here. We will be keeping our SL because it's a golden zone area in which the price can tap over there also. See, 0.618 was taken, but another candle was sweeping above that also. Okay, and the rejection got, and the first target was 0. Okay, the second target was 0.382, and eventually the third target was 0.618. Okay, at least you can hold till here. 0.382 is a good setup. Okay, so this is how the Fibonacci works. Once we need to identify the trend, draw a swing high and swing low. Just draw the Fibonacci, see whether you are having an imbalance, and take the trade. Okay, so that's all for today. This is the Fibonacci settings and how to trade in the Fibonacci with the displacements. Okay, thank you.